The most dangerous time the world has seen in decades. That's a direct quote from somebody you would not expect to hear that kind of language come from. I'll explain why this is very important, because this individual, the CEO of JP Morgan, just made an alarming move. I'll explain as we explore. And the answer to the quandary that we may find ourselves in, at least in terms of a financial and fiscal level, is sound money, such as you see here, gold and silver. I'm going to be reporting from a story from the Epoch Times, but actually several members of the community did make mention in a recent live stream about this move, and I just had to do a little bit more research about it. But this is quite interesting and troubling, even though the amount of shares that were sold by Jamie Dimon, considering the stage in life where he is now, is maybe not so alarming. In fact, it's very much understandable. And so we have to take a look at this from a nuanced point of view. And I believe that this piece by the Epoch Times does a great job at this. Because Mr. Dimon does not believe that the company's prospects are, dim or dismal right now. In fact, we know JP Morgan is doing quite well as a company, and we know that Mr. Dimon himself is doing quite well for sure. But look at where he is in a stage in his life. I'll get to that in a moment. If you enjoy videos like this, where I bring you economic news as well as the perspective from a precious metals stacker and accumulator, and how important precious metals are, I hope you will subscribe to the channel. And maybe press that thumbs up button as well. Things like that do help the algorithm, as well as your comments. So JP Morgan Chase CEO Jamie Dimon plans to sell a portion of shares in the U.S. bank for the first time since he joined the Wall Street giant nearly 20 years ago. According to the bank's filing on October the 27th, Mr. Dimon and his family will sell 1 million shares in the lender from next year for financial diversification and tax planning purposes. Currently, Mr. Dimon and his family hold about 8.6 million shares of the JP Morgan stock, worth about $1.21 billion based off the current market price. Their planned stock sale would be worth about $140 million, leaving them with remaining holdings of about $1.07 billion. But 1 million shares, that's a big chunk. No question about that. But we're going to keep things in perspective here. This article actually does a great job with his research and the amount of shares that he's bought in the past. He continues to believe the company's prospects are very strong, and his stake in the company will remain very significant, according to JP Morgan said in a filing. But Mr. Dimon is 67 years old, one of the most prominent voices in corporate America. He joined the bank in 2004. He was promoted to CEO the following year, and then a year after that, he assumed the roles of chair and president of JP Morgan. Yes, indeed. And think about what the dollar was like back then compared to where it is now. And some of that is what JP Morgan CPO Jamie Dimon is complaining about. It's about the dollar. He did turn JP Morgan into the largest U.S. bank in terms of assets and deposits, steering JP Morgan through the 2008 financial crisis, and was integral in the rescue of First Republic Bank this year, which helped quell turmoil fueled by the collapse of several regional banks. So in a sense, JP Morgan kind of saved the banking industry. With their vast resources, they were able to do that as one of the largest banks. Kind of crazy to think that's how big some of these banks have gotten now. They can bail out the others and prevent a contagion factor. And really, that's not good when you think about it, by the way. But JP Morgan shares have increased by about 250% during Mr. Dimon's leadership, more than 10 times higher than the S&P 500 Financials Index gain, which made him a billionaire. The 67-year-old bank chief has an estimated net worth of $1.7 billion, according to Forbes. In 2009, Mr. Dimon purchased $11.5 million of the bank stock as a signal of confidence when JP Morgan shares lost 27% in just 10 trading days. And in 2016, he made the same move, buying $38 million of the bank stock when it tumbled to the lowest price in more than 2 years. Succession plans of Wall Street giants have come into focus after James Gorman announced plans to hand over the reins of Morgan Stanley, and Peter Orszag became CEO of Lazard earlier this month. Shares of JP Morgan slid by more than 3% for that day. So far this year, the bank shares have risen by 1.4%, outperforming the S&P 500, which has declined by 18%. This is a reminder that the CEO is getting closer to retirement. He has 3.5 years left on his 5-year plan as CEO, Mike Mayo, an analyst at Wells Fargo, said in a note. So this could be a tiered approach for his retirement and exit out, and maybe shoring up, some more safer bets for his family and himself in his later years. We'll see. But in the end, why would he need to do that? Well, because there's a warning of multiple threats facing the global economy. A stock sale comes as he has repeatedly warned, and I've covered this on this channel as well. He's repeatedly warned about multiple threats facing the United States and the global economy, including geopolitical risk, government high debt levels, not just the U.S. government, but governments around the world, and high inflation. We are seeing that the dollar still is at a stubborn 3.7% CPI index with the inflation year over year. And so it is something else. During JP Morgan's third quarter earnings call 2 weeks ago, he warned that the wars in Ukraine and the Middle East could be disruptive, warning of far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. And right now, it is a powder keg there, indeed, as Israel has begun the ground invasion with threats of war against Israel from Turkey, a NATO ally. This may be the most dangerous time the world has seen in decades, Mr. Dimon said. And that's saying something. Say what you want about the man. I know he's not well liked by many of us here in the community, but nonetheless, you cannot, there's something to be said for experiencing from what he's seen. And so he's seeing troubling times ahead, and these multiple threats very well could lead to an economic collapse if all of the right pistons are fired at the same time. For the powder keg, it's highly unlikely, or I'll say it's not highly unlikely, it's unlikely to happen, but I do think it is a possibility, and a greater possibility than we've seen as a threat in decades. So I would agree with Mr. Dimon on that. Now, just a few days ago at the Future Investment Initiative Summit in Saudi Arabia, he sounded the alarm about government's high debt levels, expressing doubts that governments and central banks worldwide could address the current economic downturn with persistent inflation and weakening growth. Fiscal spending is more than it's ever been in peacetime, with the highest debt levels we have had by governments, and there's this omnipotent feeling that central banks and governments can manage through all this stuff, Mr. Dimon said. So welcome to the club, Mr. Dimon. We've been saying this for a long time. Central banks are not the answer. The policies that they have are not the answer. Really, the only answer to this is fiscal responsibility at the central bank level and at government level. Government spending is out of control, and it's not just here in the United States. It's around many nations around the world. They have this hubris about them, and we, as the world's largest superpower, we have it too. It's a problem, but sooner or later, it will work only until it can't work, and it won't work any longer. So that is where we are at. So speaking at the summit, he also criticized central banks, such as the Federal Reserve, for being dead wrong in their financial forecast, as the actual number is far different from the Fed's projection. And he also mentioned quantitative tightening, the monetary policy that the Fed uses to handle inflation, is one of the threats to the U.S. economy. Well, that's just it. They're creating the problem that only they can fix, and they're using quantitative tightening now, which may seem like a good thing, but it's creating other problems: high interest rates, higher housing costs, and monthly payments are going to increasing exponentially, with interest rates at 8% now. 7 to 8% is the normal now for mortgages. They're out of reach for first-time home buyers. in almost every category in almost all parts of the nation, with few exceptions. But nonetheless, it's not very attainable to have a mortgage these days, especially if you're just starting out to buying a home. And it is sad. And sooner or later, that's going to reflect, and there's going to be a ripple effect, and it could happen fast just in that sector. Then you have the commercial space. And he didn't talk about that, but we've talked about that before here in this channel, that there very well could be a commercial real estate crisis, and we already are in one to some extent. We've talked about the doom loop, and we've seen that occur in cities around the country because of crime, but it's also because of the other factors, economic and policy-wise, that are just as much to blame for some of that. But nonetheless, the answer to all of this is sound money, because as people lose confidence in the economy, they're going to lose confidence in the dollar, and they're going to rush towards safe, sound money and a savings vehicle, an insurance policy. That's exactly how you should view gold and silver themselves, as an insurance policy against this economic instability. And so, yes, I did use the word economic collapse. And though I don't think it's likely going to happen anytime soon, and there are enough things that are happening that if the cylinders that the pistons are fired at the same time, we could see it, and we could see it fairly quickly. I think if we run into a potential war, world war, that could, and where supply chains are disrupted, and we could see a potential economic collapse down the pike. But gold and silver will survive all of that for sure, and it's the safest bet out there in terms of at least being prepared in a financial sense. But it's always good to be prepared in other areas as well too, by having good stores of non-perishable products and food and the like, and to be prepared with a good defense for your own homes, because you never know what's going to come down the pike. I hope it doesn't happen, but we should be prepared, and this is one reason why we stack gold and silver. So let me know what your thoughts are on this video. I hope you found that informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for watching, and encourage you to please rate, share, comment, and subscribe.